All right, Luke, we're talking to a Vancouver broker by the name of Justin Hayek about tax loss selling and a bunch of other stuff because apparently that time is once again upon us. And then we're talking to QC Copper and Gold, or IM, in case you can't stick around for it. But they're no longer going to be called that. They're actually going to be called XXIX, and they've done a bit of M&A. So a couple of maybe unpleasant questions that I have to ask there. But before we go through the movers of this week, and I know this is not at the top of your list because it's technically only up 50% this week, but Q2 Metals is actually up over 3.5 times in about 2 months' time. So it's something is going on here. This is a lithium explorer co with assets in the James Bay region of Quebec. It is now at almost 150 million Canadian dollars market cap. There's about 130 million shares outstanding. I see a 52-week high of $1.10 or $1.11, I suppose where we're at right now, and a 52-week low of 17 cents, right? So there's been a big jump there. And I'm sure you'll be bringing this up later on, but they also have close to 30 million warrants outstanding, most of which in the money right now. There's 5.4 million of which expiring in December of this year. And then on top of that, there's also 8.6 million options outstanding. Now, why they're up this week is because they've drilled 215 meters of 1.7% lithium, including almost 65 meters of 2.3% lithium oxide at those James Bay project or assets, which are now appearing to be a very decent lithium discovery, and also making the case for, I suppose, geological alpha, if you will, where, while the lithium market has largely sucked, people like Tom Woolrich, who is a CGC, a certified GC, and whom we spoke to not too long ago, have made money on this thing using that geological alpha. Different topic, though. I haven't really followed this story, or I haven't followed it whatsoever, and I don't believe you followed it too closely either. So instead of talking company specifics, and instead of thinking about the past and talking about how I once again missed this one, I want to look towards the future and talk about, well, actually, first of all, did I miss it? It is now too late, because buy low, sell high certainly isn't true anymore. But is this another case of buy high, sell higher? We've seen it with Philo and NextGen and Adriatic and a bunch of other companies out there. And then if I've missed the opportunity, how do I not miss it the next time? So let's maybe start with the former here, Luke. When you see something like this, this drill hit, and you look at the stock, it's up over 3.5 times in 2 months. How do you determine whether this is a fair price or a good entry to participate in, again, what seems to be, or becoming at least, a very decent discovery?
Yeah, that's the main question. Most times, I did follow it quite closely already since the acquisition beginning of this year, because they bought this new property, Cisco, and I think the history is a little bit that they already did very well in 2023. In a very short period of time, they went from 9 cents to about $1, and of course came back all the way to 20 cents at least early this year. And when they announced this news of this new property with historical assays of 115 meters of 1.2% lithium, is when I took note. But since lithium was really not popular at the time, I sort of missed the lithium boom in 2022 in the first place. And I was thinking it will probably take another year or two before lithium sort of comes back, and not in the same way, I think, because there was a big hype. Now it will just come back as sort of a value thing rather than a hype, I guess. And indeed, the stock jumped from 20 cents to 50 cents because of this historical assay, and people considered it a very good acquisition. But the thing came back again to probably 25 cents, stayed there for a while. They did the financing at 25 cents, started drilling, and very quickly announced, well, I think just days after closing the financing, they announced 216 meters of continuous pegmatites, spodumene pegmatites. And at that point, I felt, well, this is probably at that valuation, which I think was about 35 million, not a bad bet, because 250 meters is very continuous. And if they are right, and this is a team you can trust, yeah, that probably puts it on the map in the James Bay, because it would compare to the Patriots of this world, at least as a discovery hole. But I wasn't completely sure about the lithium industry. I don't know this team. It's still sort of visual, so I decided not to get involved, which you could argue in hindsight was a mistake, but that's what we do, make decisions every day of whether or not to invest. And then the essays came out. I mean, they had 120 meter of 1.7%, which was amazing. Went up, fell back down, and recently they had an even better results of 215 meter, 1.7, including a very big intercept, but visual again, of 350 meters. I didn't notice Tom Woolridge, talking about this end of August, where he modeled it already and told people like this is, in his opinion, the real thing, and he was right. At least as far as we can see it right now, it seems to be a potential tier one discovery. So I was thinking at 90 cents to still get involved. But then I looked at their share structure, and I noticed that they repriced warrants, 13 million warrants that are now well in the money. There's a free trading date coming up in 1 month, which means that the shares sold in the previous financing will be tradable on December 2nd. And typically a month before that happens, the stock could become very weak because people start to go short already or sell in advance of it. And then you have another 9 million warrants of that financing coming free. So you talk about 40 million shares coming free. That being said, I think it saved me a lot of frustration by not buying these things with lots of free trading shares and warrants in the money. But in tier one discoveries, it often doesn't really matter. I didn't buy Hercules. I did buy it, but I sold it again very quickly because of their warrant overload, and it just broke through it because there was so much volume. People noticed the real tier one discovery potential and started to get in, and it went from 30 cents to $1.60. This one could be similar. In a typical stock with an average quality discovery, I wouldn't touch it right now because that stock is coming to the markets and they will probably do a financing very soon. And those are the type of things that really put me off typically at that moment. I'm not going to buy in that moment. In this case, again, it seems to be a really, really impressive discovery, and that could just solve a lot of problems in terms of free trading shares. That was the reason I didn't buy it at 90 cents, and now it's trading at $1.05 or something. So maybe again, you could argue a mistake. I think people who really focus more on the quality of the project and don't really care about the paper because it will be solved if it's good enough anyways, those people were probably right in this case, and I was wrong in not buying it. But I mean, I talk about it quite a lot also on this show. I care about these share structures and warrants and things because in most cases, it completely ends a run. It will never break through it unless something amazing is happening, and that's maybe happening here. Is also my conclusion as far as I can. I'm not a geologist, but as far as I can assess it, and when I listen to people like Tom, it sounds like it's pretty amazing what they are finding here.
But it sounds to me like these things of free trading dates and warrants and options and everything, obviously very important when it's a subpar discovery. If it's a spectacular discovery, you throw all that out the window. The thing is going to go up no matter what. That's been in my experience with Philo, where I noticed it rather early on, not as early as I would have liked. And I was like, oh no, this has gone up a lot. I'm not going to buy it. And then it went up, multiples after that. And so what you're describing here, though, your approach is, I think, sensible long term, but it also is probably going to prevent you from being in the biggest discoveries out there. So being part of maybe the most exciting things more often than not. And it kind of flattens out your experience. So like, yes, you're going to protect yourself from when a lot of shares come free trading and the stock kind of flushes out, or options and warrants and all these things. You're going to protect yourself from that, but you might also lose your seat at the table on the most exciting discoveries if you only pay attention to that and not the rocks in particular. So yeah, how do you look at that? Is that what happens? It kind of flattens out your experience?
In cases, yes, but in other ways, no, because my argument is often, why buy this thing if they still have to, if they have a story, we have a nice blob somewhere, we're going to drill it. And I always think, well, if all these warrants are sitting at 15 cents and it's trading at 12, it's never going through 15. And I don't mind paying 25 if it's amazing. And in this case, I think I should have done that at 80 or 90 cents if I was quick to react. And it's a bit like similar to Hercules. I bought it at 32 cents. I sold it around 32 cents because I noticed there was so much selling going on that I wasn't sure if it was going to break through that wall of warrants. And it took, I think, 30 or 40 million dollar, which you almost never see in a stock like that. And in Q2, you see those volumes coming in right now. So that volume could deal with that. But that paper is going to come to the market, at least part of it, I'm sure. And companies always say, yeah, but this is different because this stock is well placed. My experience is that if only 50% gets sold, $20 million of volume is needed to break through it. If 25% gets sold, $10 million is needed. But looking at the volumes, those volumes were there this week. So yeah, I guess. And if you really believe this is tier one, then there's still the opportunity. It's a $140 million stock. If you include all the warrants that are in the money, then it's probably closer to a $200 million stock. But the argument is made by Tom, I think, as well, that this could be better, similar or better than Patriot Battery Metals, which is trading at 600 right now, and in the good market could be trading north of a billion. So if you believe in that, I mean, there's still plenty of potential left here. So yes, come back to your question, sometimes it keeps me away, even though my idea is not to get into those stories before they have something. And if they have something, well, then pay double the price. Who cares? Because real discoveries, they continue. And it's not that I wouldn't buy Philo, because Philo is different. They had the Lundin Group behind it, didn't have that many warrants behind it, and a lot of, promotional force because of their name being involved with the company. This company is maybe a little bit less well known, but has all the hallmarks on it for real discovery. So no, typically it shouldn't keep me out of it, but it has happened that I was so disgusted by the share structure that I didn't let myself in. And so I think that's my sort of issue to deal with. A lot of people have problems paying up in price. If they have seen it at 30 cents, it's very difficult to pay 90 because you have considered at 30, how to pay 90 right now. That's an emotional thing that you should try to get over, I think. But that's all emotions, and I also have to deal with it. And in this case, I'm for the moment staying out of it because I'm considering it a $200 million stock. The essays that are coming for hole 21 are probably going to be amazing and may push it to $1.50 or whatever. But I'm gonna. It's okay to not be part of everything, and I probably decided for the moment that I'm not going to be part of this one unless something happens that makes me change my mind. But it has pretty good odds of being a long runner right now.
What would it be? What needs to happen in order for you to change your mind on this one and be like, okay, no, I'm now I have to go in no matter the share structure. Like, what does it have to be? Because this is already a significant intercept, right? So if this doesn't change your mind, what would?
Right, but including the paper that's already out there, it's a $200 million stock. Patriot is way further ahead, but this is exciting and new. So this could trade at 500 million, but that's a little bit more than a double because there will be a new financing coming, and if you include that paper again, you will very quickly be at 250 million. So what am I? It's also upside, risk and upside, and it's not that this company is without risk after these 10 holes or 20 holes they drilled. If it goes to a billion, then it's a four-bagger from here. But if it's going to 500 or 600 million, it's only a double. And I think I know ways to double my money if I'm patient a little bit. So it's just not knowing the team, a bit late with due diligence on them. Probably believe in the project, but not. It's just I like to be very convinced when I make a big bet. I could put a little bit of money into it, but then what's the purpose? I think in small companies you can sometimes quite easily double your money because they are so small. Today I saw one that I think will double within 1 or 2 weeks, and I don't want to talk about it because it's illiquid and it makes it's not that I don't want to put my head out there and say it, but I think it's too illiquid to share it on the show. But if you want to put $10,000 somewhere, then you can double it, I think, in things like that. So for the moment, this is not going to be a big investment for me, and that's why I think it's not worth my time to now start investigating it, even though I do think it has good odds of doing very well from here. So if I own it, I don't think I would have sold it because there is certainly upside here.
You almost sound spoiled when you say, "Oh, it's only a 2x. That's not worth my time." But I do understand where you're coming from, though. And I mean, it also has to be worth your time and worth your risk that you're taking. It. And you, as a full-time speculator, if you will, that does change things. So that's again, it's strictly the personal situation that we should bring into account here. And maybe you want to say something. Go ahead.
No, not really. I was thinking this is very interesting because it also brings this. This is exactly the situation that I've seen quite a lot. I mean, there's no news release that I miss. I see everything, and and I consider everything. So this one I considered when they bought the project. I considered it for a moment when they had the initial visuals, and I never really bought it. So you start questioning yourself, like, did I do the right thing? Of course, you could argue like no, because the stock is at 3x and you didn't buy it. But there are situations where I still think I did the right thing, considering what I knew at the time and my own thinking process, my own investment process, my money available at a certain point in time. I prefer to have 5 or 6 big positions rather than 30 small positions. So it all also has to fit within a strategy that you have. And at that time, in June, July, I probably couldn't have made that money available, I guess. The type of money I would want to have invested in something like this. So it is also a personal thing, like you said. And there's no good or bad, I think. Even though I do really think there's upside here, I still decide not to get involved right now. And if I would have bought it at 60 or 50 cents, I think I would have kept it a little bit. And maybe that's conflicting each other, but that's also sort of a personal preference or opinion how to deal with situations like this.
And maybe we should get Tom Woolridge back on sometime to talk to us about the specifics here and see how he's dealing with it and give us maybe the next geological alpha story out there. But we don't have too much time. As Justin will be here with us shortly, and you have plenty of other names in the movers, in the list of the movers this week, including one that's up almost 200% this week. That's Tower Resources PLC. So just to note, this is TRP. It's listed in London, and that's not TWR, which is Tower Resources listed on the venture. Again, as it kind of gets confusing there, but those are two companies. And so this one, though, is an oil and gas company, but still only an $8 million market cap with a rather large number of shares outstanding. And it's also a PLC. So again, London listed. Why do you have it on here? What's happening? Oil and gas? What are we talking about?
Yeah, I didn't really want to talk about it because what do I know about oil and gas? I've worked in that industry, but not in the exploration side of things. And but I feel like we talk about a list of movers, and if a company goes up on big volume, especially the number 3 is up on very big volume, well, at least try to say a little bit about it. But let's keep it short because I don't think I can add a lot of knowledge here. I just found it interesting that a stock that didn't have any interest suddenly got so much interest without a real press release, and they released the financials. And in those financials, they talk about a potential farm out of projects that they have, and they have projects in Namibia, they have projects in South Africa. I couldn't really figure it out, so I went to a chat board. I used AI to copy a lot of chats, like hundreds of them, and put it into AI and asked to really summarize it to the basic thing. Why are people talking about this? And it was really about the farm out proposal. And people started speculating, I think, that a big party would come in and would carry them through to production. This is as far as I want to go, but it's interesting that a company can go up on really a lot of volume on a financial statement. So you would almost think that people in the know or people that know a bit more started buying it so much that the retail investors started to be interested, because in these London names, things often spike in the morning in the first 20 minutes, and then the thing always dies off almost no matter how good the news is in the junior mining game, at least. And this one continued for quite a while. So quite interesting, even though I wouldn't invest, not my type of thing. But if you are interested in these things, what worked for me is to go to these chat boards where I think thousands of messages were posted on this stock, and put it all into a ChatGPT type system and ask for a summary, and you get a good sense of why people are buying it. But I'm still not buying it, so that's my summary. And I can keep it short on the other one. Eon Resources, another oil name that has literally almost no volume, and suddenly get $110 million of volume into the stock. Again, a bit of a funny story. They had no news, and after the big move and after the enormous volume, they came out with an oil production increase message. So also sounded a bit like a leak. So in mining, we are not the only ones where people trade ahead of the actual facts. But that's the only thing I want to say about these two, because I don't feel positioned to comment on oil stocks other than this.
Same. And I was going to say enough about oil companies. I know even less about them than I do about metals, which is already almost nothing. But I do see a nice headline of 23 meters at 16.6 grams per ton gold at London Metals. And it says metals in the title, so I kind of already feel a little bit more at home. Or at least I did until I saw it's an ASX company. So it's an ASX listed company. It's listed as LM8. It's got a 65 million Aussie market cap and a 220 million shares outstanding, which is actually low for an Aussie company. And it's actually not strictly a gold explorer. It's a gold and nickel explorer with different assets across Australia, as far as I could see. So yeah, what's happening with this one? Why are you bringing it up here?
Yeah, I don't own it, but it's pretty exciting company, to be honest. I did quite a lot of work for this, for this discussion today, but in the process, I sort of regret not buying it because I looked at London a week ago when we talked about Azimuth. Azimuth made a discovery on surface with channeling, and they made the comparison to Kambalda. And then I looked at London because they have a nickel project in the Kambalda region where you have the giants like Wailu and Rio with their nickel projects, which they abandoned, I think, for a while, at least the production, because of the nickel market. That's bad. And London has 3 million tons of very high grade, and 3 million doesn't sound like a lot, but 3 million tons of 3% nickel, a typical Kambalda type nickel discovery, which normally you would get a lot of value for, but in this market, apparently people don't care unless you make the discovery, brand new. If it's already sitting there, it's not exciting enough. Is what people thought, I think, about London. But then they decided, okay, if nobody cares about nickel, let's put that on the shelf and focus on our gold. A Canadian listed company, Karora, was taken over by West Gold in that same region. And that's a bit of a funny instance of having nickel and gold in the same system. And Karora did a pretty amazing job of, looking for gold. And they went from a $19 million explorer to become I think, $1.5 billion company, and was sold or acquired by West Gold. And London decided to also focus on the gold in this nickel gold region, changed the name of the project even. And the guy running this company was actually working for WMC, a major mining company, until they were taken over by Goldfields. And Goldfield has the two projects that's next to them. I mean, they kind of split the Goldfields project into two. And Goldfields has been doing really well with this project, and now they decided, meaning London, focusing on the gold, and they are finding it. Pretty good results with 23 meters of 16 grams, and before that, I think 18 meters of 5 grams a couple of weeks earlier. In a belt where companies are producing, in a belt where they have a nickel project, big companies active. That's why the stock went up, because it's not in the middle of nowhere. It's in a good belt with good results. In my first impression from listening to a couple of interviews, pretty credible and real company. People who have been there before, have done real work there for big companies, and are now running this company. So that's sort of my quick analysis of why I think this is real. And this company has $20 million in the bank, so no financing needed. They have 3 million tons of 3% nickel in a good belt. So if nickel returns, they have a lot of, they are the go-to company, I would say, because they have real high-grade nickel sitting there, and they have a gold discovery. So considering their market cap of, I think, about 60 million Aussie, it's still not very, it's still quite interesting, I think.
Yeah, it does seem interesting, though. Again, the ASX is way out of my depth. I barely have the bandwidth to keep up with the TSXV, so I don't really have anything else to add here. The hours are also kind of weird for me, the trading hours. So what I'm looking at the next.
Well, sorry, one thing, but same for me. And since I don't know that market so well and the market dynamics, I also have more hesitation to buy things like this because in Canada, that sometimes small things that you wouldn't see on the surface make a big difference. And those things, I do not spot that quickly in Australia. So people listening to this and thinking like, oh, he's forgetting this important fact. That could completely be. I also am not that much in depth into the Australian markets other than the results. And with 20 million in cash and with this nickel discovery, which I think is worth way more, and this new gold discovery, I think in Canada, I would give this a way higher valuation than 66 million Aussie. But that note is important, I think, that I am also not. I don't know many people in Australia in the market. I don't really know the market dynamics, and that sometimes could be important for buying at the right time and selling at the right time. And I don't know that much about that part of it. So that's a good note to make.
Yeah, that's fair. If you don't understand it, don't do it. That's kind of been my motto here. Though if it really truly was my motto, I'd probably end up doing absolutely nothing. Which could also be a good weekend. But you have US Gold Mining Inc. on here. That's a US listed company. It's listed as USGO. $120 million market cap now, US, that is 12 million shares outstanding. So this is an almost $10 stock. Like this is, I thought we'd only do penny stocks on this show, but they drilled, they had an interesting news release. So they announced 600 in the headline, at least this headline says 650 meters of 1 gram gold equivalent from near surface, equivalent. It's about 70. If I scroll down to the assay table, it's about 70%, 73% gold in that intercept. The rest is copper and silver. So seems like a decent intercept on the surface. I haven't read through this news release though, although what's happening. So typically I'd like to take a little bit more time when it's that big of an intercept. So why do you have it on here?
Yeah, this is a company that I wouldn't quickly invest in, and that's more of a personal preference. It is a company that's set up in a way that could completely have a big promotion. Well, I shouldn't maybe call it a promotional run. I wanted to say that, and I just said it anyways. But it is a company that is structured in a way that's really set up for a good share price move, and that's what happened this week. They spun out this company out of Gold Mining Inc. That's a well-promoted stock with people like Amir Adnani involved and other people that are, I think, business veterans, you could almost call it. David Garofalo of Gold Corp in the past. And this company is owned 80% by gold mining, 5% by insiders, considering that they are not going to sell or assuming that, and 15% other shareholders, with only 12 million shares out and not too many warrants and options, I guess. And then releasing this whole. I find it difficult in very big deposits like this, because this is already a very big deposit in Alaska, a place which I always find difficult to, and maybe it's a good place to invest in, but personally, I'm not too attracted to that district for some reason. I sometimes have personal preferences that I cannot even really explain well, but and then drilling a hole like this, I always wonder, well, to really judge this hole, I would probably have to see it in a model. That's not my skill set in the first place. So somebody like Tom Bullrich would be able to do it. It's not my skill set. But with all these people on the board, big names, a good share structure, spin out, and then drilling this hole sort of out of the gates almost, it feels to me, and maybe I'm wrong, that a big promotional effort is ongoing. And sometimes those things are the place to be, because they run like crazy. They are a US, the US is even in the company's name. So I think they can also attract a US market, which is sometimes very deep and can get a stock really going very well, even more so than in the Canadian markets in certain cases. So I find it very interesting to follow this. I wouldn't buy it myself, but it is a company that it wouldn't surprise me if it would do really well because of the share structure, because of the deposit, because of maybe a good market coming and big names being involved. Sometimes you get these markets where these stocks can suddenly go up 10x, even though the deposit has been known for a long time. And maybe this hole was a little bit of a confirmation type hole. But I'm making a couple of assumptions here. It looks to me like that. It's promoted to me like that, the way I look at it. And that's my take on it. And it's not my style to invest in these things. And that's, again, a personal thing. So I'm staying close to the personal stuff today, which I think is important. Everybody has his own style, and you cannot just replicate somebody else's style. And that's why I stay away, even though it's quite a fascinating story, the way they set this company up.
So they claim, I'm trying to read through the news releases as we're talking here, but they claim it's continuous mineralization. Although I'm not sure how uniform it is, how uniform the grade is within that interval. It seems rather uniform, but it could be there's different mineralization types. It seems complicated on the surface. I'm not getting the full information that I typically like from a news release either. And it's also, do you think there's a psychological thing to it too, though? I mean, it's a almost $10 stock, right? This is, again, as I kind of said it jokingly, but it's not a penny stock. So does it still, typically when people see like a dollar stock or like a 50-cent stock, they're like, oh, this can go up so much more because, all the other stocks are worth so much more. And so do you think there could be a psychological thing where the potential upside is perceived as being less here just because of the per share price? I know it sounds silly, and that's absolutely not how you should think about it, but could there be something to it from a market perspective?
Yeah, I think it's probably also a decision, right? It is important, I think, even though from the market cap in the end and the way you treat, capital allocation, how you are raising money is important. But I certainly consider share prices. Sometimes I'm not buying something because it's 35 cents, and that's indeed stupid. But psychology is a thing in liquid juniors. This is a little bit different, I think. I think it's probably done on purpose. I'm thinking about Abitibi Metals, which was Abitibi Royalties, which was a different type of company. It was a royalty company, but they really had an asset that they wanted to protect, and they said we will just focus on protecting it, not issuing unnecessary shares. We protect what we have. That's good enough. And very slowly they got the share price from $3 to 25. Slowly, I think they did it in about 5 years, but it was not like a spike type move. Well, maybe this is the right time to have these big deposits promoted in a new company. I think also US listed, but and maybe if you want to sell this story to institutional investors, maybe it is better not to be a penny stock and to be a $10 stock. So maybe it is not oriented around the retail, and with their team, they may have the right connections to actually get the bigger companies invested in these things. So it's certainly on purpose. It's not a coincidence that they have only 10 million shares out, 12 million. So it's by design, and I don't know them. I didn't talk to people in the company. It's just my observation that it's probably going to be also a promotional effort, which is not a bad thing. It just comes across like it to me.
Yeah. Good. That's fair. I was just thinking about that share price again. Just we don't see that all too often in these conversations. Let's do one more before we let Justin in. Provenance Gold Corp, ticker symbol is PAU. Now we're back in Canada, so I feel a little bit more comfortable. No huge volume, no huge move. Again, we kind of sound spoiled here, but it's about a 50% move this week. What's moving this stock?
Well, I would call it a big move. Its stock was, going sideways for a very long time, and suddenly, on pretty okay volume, actually went up to 18 cents. Again, something that I hate, bad share structure, and that's why I didn't buy it. Pretty interesting drill hole. They released some results last year that were pretty interesting. This year they drilled deeper, and they have a sort of new. Well, I wouldn't say a new thesis, but they think it was not well understood in the past. That story you hear quite a lot in this market. People who think that it was not understood well in the past and they drill it again. But a couple of people have approached me out of the blue and also were very excited about this. They think this is the next big thing. I don't know about that. I don't know them. But that hole that they have essays out for, where visuals are released, that one certainly seems interesting. And the stock has crushed through all those warrant levels of 12 and 15 cents so far. So there's certainly a bit of interest. I think what they have is they have a project in Oregon. They found visible gold at multiple depths. It suggests it extends deeper than they previously thought. Different rock type. What they have drilled is very altered. They see visual gold at different levels. They have written it up. They are still closing an old financing, which was, I think, at 8 cents, and there was a first tranche, and they are now closing the second tranche. Of course, a lot of interest. Those that they mentioned to the market that the thing is fully subscribed, of course. This is such a situation, maybe, like Q2, where if you really think this could be a new discovery or sort of a new extensional discovery, do the homework right now. And, I think it will not go up as much that it would if there were no warrants outstanding. There's so many warrants here as well that it may be a little bit of a slower mover if they make a new discovery. The difficulty with these things, I think, is I'm not a geologist, and there are so many drill holes in this project that to really know what they're trying to do here, and you want to have your own opinion, not just ask the company. You want to have all these previous holes plotted and understand, okay, what did the previous operator try to do? And why did they not accomplish what they tried to do? Because companies walked away from this. And why is this company now considering this as a new thing? Maybe deeper, maybe better, maybe, understood in a different way. And have a level of confidence in it yourself to think that this company is right in their assumption and the drill holes are proving that thesis. And I don't feel qualified to do that without a bit of help from geologists. So maybe this is another one that we should ask Tom about. For me, it's always easier when it's greenfields, when there's a lot unknown, and because there's not much known, and out of the blue something happens, you just know what the market reaction will be because you can understand one hole with a certain level of, with a certain intercept. But now that they are going to drill in different angles, close to previous holes, but not, but in a deeper perhaps, what will it really mean to the project? What will it really mean to the thesis that they are trying to prove here? And I feel, I think you have to be honest when you have that edge and when you are probably better than average. And I don't think I am that much better than average in terms of understanding this. But it does sound interesting. So maybe that's not very satisfying to have someone talk about something and say he doesn't understand it, but that's probably the way it is. But I do think that this is one to investigate if you have the ability to. I'm planning to learn a little bit more about it, but I would need somebody to help me a little bit on the geology and to really prove to me that this is. Sometimes a team can help if you have a team that you fully trust, or that people trust that team. That could take concerns away. I don't know the people in the company, so that's not giving me the comfort I need. But it is one where people are really waiting for those essays, and I can imagine that hole is going to be pretty impressive. But to really know what to do with that hole that's upcoming is more difficult, to be honest. Because if they drill 1.8 grams over 200 meters, it's pretty impressive. But what does it really mean to the project? And I cannot give you that answer right now. So I think you would need to be a bit more informed than I am.
Yeah, it's definitely not obvious because, again, there's about 108 million shares outstanding. There's 64 million warrants. About 50 million of those warrants are going to be free trading, and they're kind of between 12 and 24 cents. But the majority is let's see. Yeah, the majority is under 24 cents, really, that are going to be free trading within the next 52 weeks. So something has to give geologically here. And there's a couple of things that they're just almost too unclear to me just by the looks of it. As you were talking, I was just kind of looking at it and writing stuff down. And this is my attempt at making geologists laugh, but there are high-grade pockets here. And I'm just wondering, what are they associated with? What specific alteration types, structural features? Those are kind of the main things that I want to see first of it. Mineralization here is deeper. So is this potentially a different mineralizing event that we're talking about that would take a little bit more brain power to understand it and come up with better targets? Or is this kind of an extension of the same system that's near surface? We don't quite know that. Metallurgy should be okay. They mentioned that the core is not silicified. So what does that mean? What does that tell them about the hydrothermal conditions, if you will, that were present during the mineralizing event? And how is that going to change their exploration strategy? So there's a couple of unanswered geological questions here. An interview with the company would actually do well. So if anyone's listening who's close with the company, shoot me an email. It's Antonio@resourcetalks.com. Do an intro or whatever to someone within the company and happily talk to their geos and see how they answer these questions. But I think this is a good example, though, Luke, of something where you can find something that kind of gives you an idea, there might be something here. And if you do some more work, you might get positioned into something that you believe, if you have a positive answer to your analysis, something that you believe is very very good, but not everyone is noticing yet because these questions kind of that I ran through here quickly are not obviously answered in the news release. So yeah, I think that's a good example, but that's basically all I have to say, which is not much.
Right, but I think it's still an interesting conclusion, right? Because even though I feel comfortable to talk for half an hour to 45 minutes every week on the show, and I typically pick the companies that I have, that I feel like I'm qualified to talk about, even though I'm not a geologist. I've never studied like finance, but I've been here long enough to, I could say, consistently make a return in the market that I can still stay around. But when you see a company like this with maybe 100 drill holes or more, making sort of a new discovery, I mean, a company would always frame it towards the positive. That makes sense. I mean, that's not trying to say bad things about the company. That's their job to make you, like their work. But since there are so many holes, and if they drill a hole that's pretty close, but in a different orientation or deeper, what is it going to mean? Is it suddenly going to be a game changer, or is it just a nice promotional intercept? And I think it's fair to just say that I don't know enough about it, and even if I spent 2 or 3 days on it myself, I wouldn't even know. So I would need somebody to really help me with this situation here. But I do think that something is happening here, and that some next week or the week after, when the essays come out, you will see a big market reaction, either up or down, because there are many people talking about it. Sometimes I get the impression that it's promoted a little bit because I've been approached by a number of people about this one. They are all very, very excited. They think this is the next big thing. Haven't really made clear to me yet why, other than that this intercept will probably be good, which I believe. So yeah, this is something that you need a bit more knowledge for, I guess. And that's why I typically stay away from things I don't really understand, but it interests me enough to at least cover it a little bit this week, and perhaps we can get somebody to talk with us about it, who can give us a bit more color about the upside of the project, and if this could really grow into something that is meaningful. And then those warrants could be helpful, because I don't mind paying 30 or 40 million market cap if there's a breakthrough. But again, you would need to be comfortable with understanding it, and that's not what I am right now.
Yep, I think that's fair. And let's wait for the assays and see what happens there. And let's have Justin join us because he's in the waiting room. Anything else you want to add just before I let him in?
No, I'm excited about talking about tax loss selling, because it's a big thing in our illiquid sector, and let's find out what he has to say.
All right, Justin, first of all, thank you so much for calling in on what looks to be 4 a.m. For you, or something along those lines, because we can talk about very fun subjects like tax loss selling. Well, let's start high level. What is it? What is tax loss selling? When does that season start? How do you look at it?
Yeah, thanks for having me first, Antonio. Tax loss selling, from now I'll speak to this as a Canadian, right? Basically what it is there's a deadline that CRA, or our tax authority, if you will, imposes on Canadian residents, whereby in order for capital gains and capital losses, or I should say the deadline for capital gains and capital losses that accrue through that calendar year. And so if someone is looking to what we call crystallize losses, that hard deadline, but this year I believe was December 30th off of memory, you have to execute your sales by that particular date. And so what you tend to see, or what I've noticed, is that investors really don't necessarily think about crystallizing those losses until really come December. Maybe always in the hope of the name recovering to perhaps their cost base, or just in general kind of recovering. And then I, again, tend to see this kind of accumulation of tax loss selling come December. So as Canadians, I think we, again, tend to hope that things recover, but then you see that accumulation really occur in December.
So is there something I can do with that? Do I just wait and kind of sit it out? Is it even worth it trying to get ahead of the herd, or how do you look at that?
Yeah. So I'm, in my view, I guess really it comes down to a couple of things. One, really taking a hard look at the companies that you've invested in the sense that, over the course of the next, let's call it few months, are there any real potential catalysts, right? If a company is, I don't know, waiting on a permit and that's going to be several months down the road and the stock has performed poorly, say year to date, I'd suggest you're probably likely to see that tax loss selling really kick off towards the end of the year, right? Be it October, November, December. So maybe as a strategy, you crystallize your loss, right? Apply it to gains perhaps that you had earlier in the year, or at least from, again, a Canadian tax perspective, you can apply them to gains that you had over the last 3 calendar years, right? Yeah, so that's one strategy worthwhile considering. The other, I think, is if the company is in need of financing, and being that the environment which we're in, i.e. risk capital is difficult to come by, and I'm talking about now specifically grassroots or early stage exploration type of capital, it might be the case where you run into this issue where current investors in the name who are perhaps aware of a pending financing, or the writing is on the wall because the balance sheet is looking pretty skinny in terms of cash or cash equivalents, you might see a little bit of a sell-off in anticipation of a financing. And that's something that I think, I don't want to say a lot of investors do, but I do certainly see it amongst investors.
And you mentioned getting ahead of the herd in that recent blog article that you wrote. So getting ahead of the herd in the tax loss selling, but isn't everyone kind of trying to do that? And wouldn't that just kind of move the entire selling timeline a bit earlier? And is it really a way to get ahead of the herd that's trying to get ahead of the herd?
Right. Yeah. I mean, difficult question to answer without knowing what everyone's thought process is. But I'll speak to kind of my observations or my experience, if you will, with clients or what I see. Again, for whatever reason, be it people are hoping to see a recovery, say, between now and beginning of December, or there's, I guess, really, for lack of a better term, people aren't really thinking about it until December. Again, just my observation and my experience. So I guess I put that blog post out there just to make people aware of the fact that, December is quickly approaching here, worthwhile considering, worthwhile thinking about.
Do you think that a lot of people sell and then buy something else back to keep exposure? Or is it selling and just waiting until the phenomenon is over and get back in December or whenever they think they need to get back in?
Yeah, good question. So one strategy I suppose you could consider is, let's say you have exposure to a major gold miner, right? Take your pick, but you're in a tax loss position and you want to crystallize that loss, but you don't want to, for lack of a better term, you don't want to lose that exposure, if you will. I suppose one strategy you could consider is crystallize your loss and then buy a position in a name that's equivalent in terms of beta or whatever metric you want to look at, or maybe you buy an ETF that has exposure to that underlying name, right? So perhaps you're not doing a rotation on a one-for-one basis, if you will, right? Like having the exact exposure, but at least you're not totally eliminating that exposure that you perhaps desire.
If you were to sell, but you want to get back into that same stock, is it a 30-day waiting window before you can get back in to not be, not get in trouble again with tax authorities?
That's correct. Yeah, for Canadians, 30 calendar days, exactly, 30 plus 1.
Is that for Canadians and for US citizens? Is that different or is that the same?
That I don't know, and not something that I'm obviously comfortable or even qualified to speak on. But okay. For Canadians, it's 30 plus calendar days. Yeah.
I'm also thinking about that 30-day rule. Like how often do companies' financials change dramatically in that 30-day window? And can an investor really avoid getting caught in a liquidity trap when trying to rebuy? Because that's also kind of a sensitive subject right after that, right?
Yeah. So you mean in the sense that everybody's trying to rush back into the name 30 days later?
Yeah, kind of. Yeah.
Perhaps. Yeah. I'm just trying to think back to any kind of experience where I've seen that happen, and quite frankly, I don't really recollect a time where that happened. Again, unless you're perhaps aware of a potential catalyst, or you think there's something on the horizon, right, within 30 calendar days, say, maybe it's worthwhile, again, a worthwhile strategy to say, okay, I'll crystallize my loss and I'll revisit this name in 30 plus days, right? Especially if it's something that, in terms of a company as an investment, is of merit in your mind, right?
True.
Are you doing this yourself? Are you selling stuff in September-ish to for the tax loss reason, or is that difficult for you in your position as a broker?
Yeah, no, I already started that process probably about a month ago. And for me, kind of the criteria was, two or three things. One, the company in terms of the project itself, or maybe the capital structure or whatever other criteria you want to look at, is really not in a great spot, i.e., they haven't had great or favorable drilling results. And so I'm down on the position. I don't really have much hope or much conviction that things will turn around, at least very quickly. Two, the balance sheet isn't exactly pristine in the sense that they don't have a bunch of cash or cash equivalents. They're in need of financing. Going into historically, I think, time period in the year where, again, because that tax loss selling picks up, you tend to see selling pressure. So trying to raise capital in a declining market, as we've seen, generally speaking, over the last 2 years, very difficult to do. Yeah, so I started that process about give or take a month ago, where I'm sifting through the names in my non-registered accounts, which is cash accounts, which are taxable trades, if you will, to look at names that really I think are worthwhile selling at this point in time.
Does this create a buying opportunity though for some of the higher quality names? And I think, Luke, you can also jump in here with some of the data that you've ran, because I'm really thinking of tax loss as kind of an overall accepted thing where everything goes down, but does everything really go down? And you have some data on this, and then we can discuss whether that makes for a good buying opportunity.
Yeah, well, there's always a difference between, I think, the actual data and your own sort of impression. My impression was always that the best companies already turn by September 30th, but I think that's actually when tax loss season actually starts. But I've seen names like Prime Mining, for example, who did really well a number of years in a row if you would have bought it, well, the first days of October. But that's one name that I just mentioned, and I've seen that with a couple of other names. So when I look at the numbers, and I just compare, buying in September 30th and selling in February every year, October 30th and selling in February the same date, and November and December, I see, according to the data, but I did that on the GDX, which may not be the ideal index, buying on October 30th is the best date. Do you have, you started this process. Do you have something in mind, like what is the moment you want to get in? Maybe TSXV is a good thing to look at, but what's your impression over the years, a re-entry date?
Yeah, so I'll speak to maybe looking back at the historical performance of the venture. So I pulled up the data. I've got data going back about it's 20 years. And it's historically the case that if you've seen negative performance on the TSX venture from Q1 through to Q3, that 2/3 of the time, 66% of the time, we've seen negative performance Q4 on the TSX venture, right? So that's for the venture as a whole, as an index. My thinking is you could probably apply that to individual securities, individual issuers, but obviously, like, you're going to have those issuers that are exceptions, right? Because of perhaps a discovery or some sort of positive or meaningful catalyst, right? So that they would break that rule, if you will. So as far as a re-entry is concerned, probably want to start to consider or accumulate back into a name, assuming you've sold at least 30 days or more ago, come December. Again, historically, from what I've seen, my personal experience talking to clients, that conversation of tax loss selling really doesn't start to pick up until December. Perhaps it's, let's call it suboptimal, right? But it's just human nature. So for Canadians, tax loss selling really picks up come December, or at least those conversations. And then we have what we call an RRSP account, or RRSPs, whereby, as Canadians, we can make contributions throughout the course of the year, but the deadline is always, end of February, call it, or first day of March. Of course, conversations with making contributions to RSPs don't start happening until February, right? So people, I think we as humans tend to kind of wait until that deadline approaches. And I think that applies again to tax loss selling, and it's suboptimal.
Do you think this time could be different given the kind of wonky, if you will, economic situation, elections and whatnot, everything else going on? Is it always kind of the same this period, irrespective of what's happening in the broad markets, or did you notice it being different kind of in a 2020 mini bull market or right before that?
Yeah, so in my view, if it is going to be different, I don't know. Again, I'm just looking at the odds, if you will, the historical odds, right? 2/3 of the time, negative Q4 performance. If Q1 through Q3 is negative performance as well. Is it going to be different this time? I don't know. Quite frankly, I don't know if I'd be willing to make that bet, so to speak. I guess the one kind of caveat, if you will, is I would not be inclined to sell what I deem to be a quality name solely for tax purposes. You know what I mean? In the sense that if it's a quality company where they have everything going the right way, be it geologically speaking or the cap structure, it's a quality deal. I wouldn't myself go so far as to sell the name just to crystallize loss, to hope to buy back 30 days later at the same price or lower, right? Again, I would focus on those names that are, perhaps not of the companies aren't in the best position, or it just simply did not work out.
That's exactly where I wanted to go with this, because I'm thinking, is this even something I should care of? I fancy myself a long-term investor, at least when my short-term speculations don't work out and I'm forced to hold my bags. But should I care about this as a strategy? Is it really a strategy, or should I just focus on high-quality names, position, and let the volatility do its thing over the short run?
Yeah, I think you focus on quality over everything, right? Tax loss selling in a way is just kind of noise, if you will. Focus on the quality names that you would be willing to kind of hold through the ups and the downs and the volatility that you mentioned. For me, in my view, in terms of looking specifically at this quote unquote tax loss selling season, it's more of a strategic kind of trade, if you will, in the sense that there's a short window here where things can get a little bit crazy, because you do historically see also, I think, lower liquidity come December. I can speak to, again, my history or experience. Typically come mid-December, people aren't really looking at the market much. Volumes, I think, typically dry up. And so if you're selling into that, low liquidity environment, you could see some names kind of, decline or draw down more than what you would expect. So that might create an opportunity, right? So if you're a non-Canadian like yourselves, you might be looking, or you should be at least looking or sniffing around come early mid-December to see if there's any names that are being unjustly sold off.
What about earlier this year? There was a new rule in Canada. I don't know what the name is, but they included a new tax loss or capital gains tax, I think, starting in June. Maybe tell us what it is, and if it has any effect on our end of year season.
Yeah, correct. So what the Canadian government has done now is they've bumped up the inclusion rate, and the inclusion rate just means the percentage, if you will, of your capital gains that are taxed at your marginal tax rate. So as an example, let's say you've had a lot of success investing in the junior mining space. God bless you if you have, and you've made $1 million in capital gains. Instead of half of that being taxed at your marginal rate, it's now 66%. So anything over $250,000 in capital gains after, I believe the deadline was June 25th, though please don't quote me. The inclusion rate for Canadians is basically 66%, as opposed to historically 50%. So what impact might that have on the market? Hard to say. I suspect, just kind of given the relatively high threshold, if you will, in terms of capital gains at $250,000, it's going to be such a small percentage of investors. So difficult to say, though, what kind of impact that might have on, share price performance come November, December.
Yeah, because the TSXV was quite weak in June, but overall before June it was quite strong. So maybe there was already a bit of a selling event. Could it be that well, you just said you don't know, but is the likelihood higher that event right now would reduce the tax loss selling season right now? or do you think that's completely a separate issue?
Yeah, maybe. I do think though, and this is where it has to get very name specific, but you guys have probably noticed this too. There's this bifurcation in the market that we've seen, this year, where you've got companies with really great assets or positive catalysts, be it a discovery or a new strategic investor that's come in, where their share prices have performed exceptionally well. And then you have this probably the majority or a large percentage that have really underperformed relative to that haven't had access to capital, have had poor share price performance. So maybe again those names, the one that have been poor performers, have already seen some level of tax loss selling. To your point, Luke, difficult to say without really, I think, diving down into individual or specific names.
If I may, I want to move the conversation a little bit. I mean, you see a lot of accounts, I guess, of clients, and we have seen a pretty good year, but I don't think for most people it feels that way. Do you see people really making money on a consistent basis, and what are those people doing? I mean, how can we also be part of them?
Yeah. So let's put it this way. So there's about 1,800 or so issuers on the TSX Venture, and I believe 900 or so are in the mining space. So let's say of those 900, how many have had negative performance? I'd love to hear your guys' guesses, but I'm going to guess somewhere probably north of 50%, right? So odds are an investor has probably seen a decline or a drawdown in terms of the performance of their portfolio versus where they were earlier in the year. How can we be a part of those investors that have actually had some success this year? Probably a question that best be asked to someone who is making the right buys, right? Who's been invested in those names that were part of discoveries here earlier in the year or through the course of this year. Without speaking to a specific name, I guess I would say it's hard to say. But look, even in a crummy market, let's just call it what it is, there are obviously still opportunities to make money, right? Special situations. Look at who was it the other day, a couple of days ago, I think put out some favorable results, Q2 Metals, right? There's a great name as an example that earlier in the year when the market was pretty weak or weaker, stock was trading at, let's call it 25, 30 cents, and today's trading north of $1, right? So yeah, more special situations, I guess you could say, have performed well. And how do you find those? I guess I would reserve that question for someone that can speak to specifics like that.
Well, you bring me in a position to promote my own website. That's good. Because the resource100.com, when we were looking at actually performers and 700 resource winners this year, 1,100 losers. So yes, there's more losers on average. It's up, but that's because some companies really pull the average up. The median would be better, I guess. But I want to just go back to my question a little bit more, because I guess you do see clients how they perform, right? I mean, you can see clients, their performance, what they are buying, what they are selling. And of course, you cannot really talk about individual cases, but I'm curious because I talked to a guy earlier this year who was in Great Bear, and he bought it really early and sold it, and didn't sell it actually. He sold it at the end, or just got his during the M&A process, he got his money out of it, and really made a fortune. And in a way, you can see him as a very smart guy because he did the best thing you could have done. But in the other way of looking at it is, it's almost like a stupid thing to do, because how often can you bet like that and be right? So where I was going with the question really is, do you see a lot of people that have an absolute belief in one company and they just keep on, just sit on it and never sell? They buy a placement early and never sell a share? Or do you see it way more that people just, sell half of it, the entire position? Or I'm just curious if you have any insights in behavior of sort of your average clients, you could say.
Yeah, so let's use Great Bear as an example in terms of holding from very early on through to the very end. From what I've seen, my observations is that typically, though not always, but typically the people who would have held through the course from beginning to end are insiders of the company, management, people that perhaps have a close relationship with management, where they're presented the opportunity early on, took the risk, were hopefully rewarded for waiting. Generally speaking, without thinking of a specific example, at least off the top of my head, but generally speaking, I think investors tend not to hold all the way to the end. I mean, Great Bear was probably one of the greater successes we've seen in, I don't know, the last 5, maybe 7, 8 years, I guess you could say, in addition to Philo and some others. But I think that's probably a very, very rare case where someone is held through that entire duration, through the ups and the downs.
Yeah, I almost feel like people who are required to file, so they will, they will have a bad, they will look bad if they sell in the process. They will own, and people who are quite rich and their position is not that meaningful to their life, and they just want to support a company because that's their mandate, if you will. If you look at like financing deals, I think a lot of people do it for the warrants, and I did that a lot as well. When there's a cheap warrant involved, and you feel like, hey, this is amazing because if they will make a discovery, I have a double bet on a company. I could even sell some of it and keep exposure. What is your impression? I mean, are those things? What percentage of the deals you see the warrants really getting into the money? Is that like half of it, or is it only 10% of the deals?
I would say certainly over the course of the last 2 years, a small number, right? So I've actually, maybe we can touch on that here right now if you guys want, but looking at the environment for financings, right? And, when is capital more often raised and what does that look like? So I've got a spreadsheet going back here to 2009. So in terms of financings on a monthly basis, or for the month, I should say, going back, the most active months more recently here were December, let's call it December 2020 through to December 2021, right? Where, again, the amount of capital raised on the TSX venture was greater than the average, call it that. So now if you keep that in mind, those particular dates, so let's call it basically through the entire course of 2021, well, the TSX venture 2021 was at its, ballpark most recent peak, right? So if the financings were being conducted December 2021, more or less at the market peak, and I would say 99% of the time, in fact, I think it's a rule, basically your warrant has to be priced at a premium. Well, it will be priced at a premium to the financing price, and probably the warrant is at a premium to where the stock is currently trading. So if you think now looking forward, be it 12, 24, 36 months, if the financing was done at peak market, the likelihood that the stock has declined is probably pretty great, unless, of course, they've had exceptional results or some meaningful catalysts. So the percentage of warrants that have gone, quote unquote, in the money over that period of time, quite low. I've got a list of maturing warrants that we have on the books, and I'd have to guess maybe 1 in every 10 right now are in the money, and that's maybe being generous.
Yeah, so conclusion probably is that even if you buy a placement, you should really buy it because you really, think there's value in the company or upside in the company, and almost never just because there's a warrant involved and you think gold is getting, maybe in a year like 2015, when you get a big run, or 2019, when the year after you get a big run, then owning, lots of warrants and lots of different things could be beneficial. But overall, I think the conclusion is that you need to look for value. In my personal case, and just a personal thing to share, but I feel like I'm doing way better on my in-market buying, and I think it is because I am very price oriented. I don't want to pay too much, and I want to decide when to go in, and I want to really understand the company. And private placements, they get sometimes offered to you, and when they then take the presentation and you like it, you buy it because you are impressed with the situation. You give an answer like within 1 or 2 days, like, yes, I'm going to participate, and you haven't really thought about it that well. Is that an observation you could share, or is that something are you looking at it in a different way?
Yeah, I mean, to each his own. I certainly think there's a time for when you possibly want to get a little bit more aggressive on the financings, in the sense that maybe the terms are attractive enough, right? Where, yes, to your point, I would much rather be an investor in something based on the merits of the company, as opposed to, hey, let's buy this for a warrant and possibly get a free ride. But there are certainly time periods. I mean, you can go back to, what was it, maybe about a year ago now, when gold was at its bottom, recent bottom, where if you were participating in a financing on the right deal at that time, you probably were getting some pretty sweet terms on those warrants, right? I don't know if it'd be, just the strike price, if you will, the exercise price, or maybe the duration of that warrant, right? But no, certainly I would focus over quality over simply having that free optionality on a warrant.
That when you mention quality, that's maybe an interesting point to discuss as well. And relating to the topic of tax loss selling and everything that we've talked about so far, really is what is in your experience quality? I mean, is there a way or something that you see in companies that are kind of proactively managing the current situation where you see like, okay, this is what a company should be doing, or what should I be looking for in my companies to know that that is quality? That's how you're supposed to manage tax loss selling season, but also just the current, negative situation as a whole.
Yeah, I think ultimately it comes down to the economics or potential economics of the project above everything, right? Maybe actually, in line with the management team, right? So management team, great project, strong balance sheet, i.e., has access to capital or already has capital and is raising capital, by the way, at the right time, right? That's, I think, one of those things too, that it's a bit of an art on that front. So, Luke, I know through Gold Discovery, and to be honest, I jump on every single morning to see the drilling results, to see, what companies have put out results that morning or the day before. That would be a great resource to look to or for companies that have put out favorable results. And then at that point, use that maybe as a starting point to do your due diligence, right? Say, okay, company ABC has put out favorable results. Let me have a look at this further. And then, do a deeper dive and give your own assessment as to whether or not you think it's quality.
I mean, when you look at deals, I mean, I think if you summarize it very broadly, there's three reasons why stocks do really well, and one of them is a discovery, and very few companies do that. Sometimes it looks like a discovery, but it's not really followed up, and then it weakens again. The other one, I think, is, like you said, management teams. I mean, that's a big thing. Everybody looks for good people, and I think good people are already good if people believe they are good, because then it's often that self-fulfilling prophecy, right? If people think somebody is good and everybody wants to jump in, follow them into the thing. And the third one, I guess, is promotion. When you are running a private placement, or at least you're part of it, organizing it, getting people into it, maybe clients, what do you think is the number one reason you are participating in these deals? Is it to be part of a future discovery? Is it to be in a mining production scenario? Do you have a sort of preference yourself, what kind of situation to be in when you do a private placement?
Yeah, for me, so I look at it with a high level kind of macro overview first, Luke. So over the course of, let's call it the last few months, I've been gravitating towards near-term producers or developers. And now really starting just now in the last, let's say, month or two, really starting to look at a higher degree of exploration deals. There was a really good presentation that Nikki Adshed-Bell did. I think it was in Denver about a month ago, talking about the cycle or the cyclicality of the industry of the mining sector. And I think she hit the nail on the head, and I agree fully in terms of where we are today, where we could possibly be moving in the future, but specifically where you want to be invested within the sector through the cycle. And so I don't know if, Antonio, you're able to provide a link to that, but I think Nikki did a bang-up job of kind of explaining how, as an investors, we can play the cyclicality of the industry, of the sector.
I've seen that, and I think I agree. That's one good source to link to.
Yeah.
Well, and it's the cyclicality of the of the space is interesting when it works. But now I'm reminded of one of the previous conversations, Luke, you and I had. We talked to John Goodman in that one where you had screened 2,249 stocks between April of 2022, I believe, and August of 2024, and the average return was 50% loss, or like a 45% loss, something along those lines. And so I mean, I'm still waiting for that cyclicality to finally do something else besides being down all the time, but that's a good point.
Yeah, maybe I do recall watching a little bit of that video, Antonio. I do want to add the fact that so when we're looking at the industry or the sector as a whole, again, there's let's call it 900 plus issuers. The vast majority, unfortunately, of those issuers with projects, the projects are just not going to ever become, economically feasible to begin with. Like the odds are already against you, right? And be it that this industry is perpetually in need of raising capital, right? So as investors, or I should say, if the issuers had little to no success with a particular asset, fast forward, say 12 months down the road, they have to raise capital. Odds are they're going to have to raise capital at lower prices, right? And then trying to recover from where the stock is at that time to where it was previously 12 months ago is all the more difficult because of that added dilution, right? So it's like, in a way, I think there's the saying like winning breeds winning. Well, if a company has got an asset that's delivering favorable results, then they probably have easier access to capital and more favorable terms, which hopefully means they can deliver more favorable results to the market and so forth. And the opposite, I think, occurs for those companies that have projects with, let's call it, less merit or no merit, where they're trying to move the project forward, but obviously not getting traction, and then diluting shareholders in the process of doing so.
Yeah, it happens more than we would like to see it, I suppose, and hopefully a good bull market cleans that out. But Justin, I know you have to almost run here. What else on the topic of tax loss selling in the coming, let's say, what is it, 2-3 months of the rest of the year? What else should we be talking about here?
Yeah, so I think we touched on it a couple times, but talked about the theme or looking at the theme of sticking to quality. Use the resources that are available to you as an investor to determine, I guess you could say, what's quality out there, be it from a speculative exploration play to a developer or a producer. Not in the position to say specific company names here today, but all to say anyways, go out there, look for quality over, I think, opportunities where it's a hope and a prayer. Those work out okay, perhaps, if you get lucky or if we run into a real bull market where spec capital is coming into the space. It's not quite there yet. I'm looking at again, I have a spreadsheet of the financings that have occurred on a monthly basis. Financings aren't exactly, risk capital is not exactly robust or abundant out there. Financings for early exploration is difficult to come by. There's even some pretty prominent groups that I know really struggle to raise like a couple $1 million on something that's relatively grassroots. When the market really turns around, when we start to see that spec capital come into earlier stage assets or companies, that's when we know things are kind of obviously turned on, if you will, and that bull market that we've all been waiting for and hoping for is hopefully finally there.
What are you seeing in terms of deals demand on both sides? Like what kind of companies are looking for capital? Is there a certain metal, like our lithium companies back in the market right now? And what about on the investor side? What are investors calling you up for and saying like, hey, Justin, find me a X deal, lithium, uranium, whatever it might be?
Right. Yeah. Oh, I think gold continues to attract, vast majority of the capital, as does copper. Just historically, that's been the case. They're a little bit more mainstream, if you will, as opposed to something that's niche. Talking about access to capital and what, investors or the investing community is gravitating towards, there's actually been a large number or a relatively large number of large financings that have occurred over the last, call it 4 or 5 months. That goes to show capital will or does come into the sector for perhaps special situations or the right projects, right company, right? So when was it here? Not long ago, Montage raised in August $180 million. Rupert Resources raised $35 million. Faraday Copper raised $23 million. Foreign Mining in September raised $360 million. Like that's a lot of capital that's coming into obviously specific names, but it goes to show, and without speaking to necessarily the merit of these companies, but at least given kind of the stage of their assets or the results that they've received thus far, money will come into or has come into the names of companies that have delivered favorable results or are special situations. So capital is there. It's risk capital is not abundant, however, at this point in time. But I think eventually we'll see that trickle down.
Good. Well, let's pick it up sometime soon. I don't have any more questions left here. What about you, Luke? You want to ask something else?
I always want to ask something else, but at some point we have to end it. No, it was fun. Really enjoyed that. I like data like this because if you really understand, it's a very illiquid market, and a lot of small things can make a big impact on these illiquid markets, way more than on the liquid markets. So I think it's important to think about tax loss season, to think about warrants, what are clients doing. The more you understand this business, the easier it gets to understand why things are going up and down, and the easier it becomes to be part of that game. So I enjoy that.
Yeah, I agree, and I enjoy that as well. These conversations are great. They're not for everybody, for sure. I know that this is not your typical, crowd that is going to want to watch a video saying, gold's going to 10,000 or whatever. But these are the actually important stuff. These are actionable things, I believe, that people can take away. So thank you, Justin. I thought this was great. I'll put it, it's Justin Hayek, at Justin Hayek on Twitter. I'll put that up on the screen right now so people can see it. But thank you so much for sitting down with us today. Luke, if you want to stick around. Otherwise, feel free to drop off, as I will be moving over to an interview that I have lined up over here. It's going to be for some more news from this week, essentially. But QC Copper will no longer be called QC Copper, and there has been a material change in their business, which I'll discuss with the company's CEO, Stephen Stewart. No fancy 10-minute intro for QC needed, though. I've been talking to and about the company for a couple of years now, and I have also for a while now been a shareholder, so fair disclaimer, not as confession, but I am underwater on my shares, so you decide for yourself whatever you make of that. But in a nutshell, QC is an advanced copper exploration development company. Their flagship project is called Opemiska. It's located in Quebec. It's a historically producing asset. It used to be a high-grade underground copper mine, but QC has reinterpreted the deposit and now wants to turn it into an open pit mine. There's a PEA on the project. There also has been over 1 million meters drilled on this project, and there are almost 2 billion pounds of almost 1% copper equivalent in pit. And there's also 334 million copper equivalent pounds of 1.35% copper equivalent out of pit. 93% of the total resource, by the way, is M&I, so measured and indicated on the NI 43-101, making this the highest grade open pit copper deposit in Canada. Now, most of you probably already knew that if you've been following the company, but what's new here is that, first of all, QC will no longer be called QC. It's going to be called XXIX now. That's going to reflect the atomic number of copper, which is 29. So XX 1010, then IX 929. But more importantly, they're acquiring Cuprum Corp, which is a private company that owns the Theory copper project, which is located close to Pico Lake in northwestern Ontario. And it's also the largest copper resource in Ontario. So it's another large copper resource. And like Opemiska, Theory is a past-producing mine with both underground and open pit resources. And by bringing the two assets under one roof, XXIX now controls almost 5 billion pounds of copper equivalent. It's an all for shares deal where XXIX will issue close to 83 million shares to Cuprum shareholders, which, by the way, including some of the management and the current directors of QC. So this is a related party transaction here, I suppose you could say, and that's something Stephen and I will discuss in the interview. Those 83 million shares represent about half of the current shares outstanding of the company. So essentially, XXIX is getting this asset for a little less than 11 million Canadian dollars at the current 13-cent share price. I believe there's an 18-month escrow on those 83 million shares, but that's something I intend on asking later on in the conversation to better understand the deal as well. And before we really get to that part, Stephen, first of all, thank you for being here. But let's maybe start with the reasoning behind this deal, which I'm sure you have. But more specifically, what I'm wondering is why now? Why not wait for a better copper market? Or if you like the asset and thought that there was strategic advantage to QC owning it instead of it being in its own vehicle, why didn't you put it into QC to begin with?
Well, thank you, Antonio. Before I answer that question, I just want to say you do a wonderful job at your intros, and I love watching your channel.
Thank you.
I'm a huge fan, and you've come a long way. So, and I'm very pleased to be back. It's been a while since I've been talking about QC Copper. We've been busy behind the scenes, moving Opamisco forward. But of course, with this transaction, to answer your question, why now? Well, it's been a long time coming. In fact, I wanted to acquire Cuprum, which is the 100% owner of the Thierry. Back in October when we acquired it privately. There was a few reasons why we didn't. Let's start with the first of three I'll talk about. There's many, but the first of three primary. The first is the Thierry was acquired out of a distressed situation, and we effectively acquired the debt from the vendor. And I don't want to say forced the sale, but it was we coerced the sale of the asset at what I believe is an extraordinary low valuation, exceptionally low valuation when Cuprum acquired it back in October of 23. As a part of that transaction, and then to avoid what would have likely been a litigious situation, the vendor remained a shareholder, a significant shareholder in Cuprum to the effect of 29%, with the idea that they will grow in value. I said, look, come on board. We're going to build value here. We saw a huge opportunity on this asset, which has just been owned by a succession of capital constraint juniors for decades, meaning there just hadn't been the time, attention, or capital available to figuring out what it is, developing it, and really turning this into the potential of a mine. That's what we see. So that was part of the reason, and the vendor wanted dedicated exposure. So they didn't want it baked into QC Copper. They didn't really know QC Copper, and they just wanted its own vehicle. And so I said, fine, we'll do it that way. You'll note at the time QC Copper did acquire 9.9%. So I mean that was in effect a signal of my intention, and obviously the stars or the die had not been cast at that point in time. We still had options. We had options up until a week ago, but the idea was always to create in my mind, the largest copper resource, certainly in Eastern Canada, and we're there by leaps and bounds. So I digress. Now, the second reason why we didn't acquire it initially was because it was a competitive process and it had to move quickly. And QC Copper at the time, I mean, the database just wasn't where it is now. That's for sure. Part of the reasons why we thought we had value add is because we have, as you indicated off the top, we broke down 1 million meters at Opamisco and built it back up. And that's sort of the same process that's required at Thierry. And the last reason, and perhaps the most important reason, is that when this was going down in 2023, QC Copper was in the midst of a long-delayed mineral resource update. It took us a year longer than anticipated. So I felt correctly that if we went and we pivoted towards another asset like Thierry, the market would have perceived that Opamisco was dead, which wasn't the case and isn't the case. And I'll emphasize that the Opamisco is the acquisition of Thierry does not change our viewpoint or our strategy or plan to develop the Opamisco at all. It's just another asset that we felt we can acquire or consolidate at a very good value. It is excellent value for QC shareholders, and I believe that'll be demonstrated in the years to come. It doesn't happen overnight. But the ability for us to have a dual asset strategy, to have nearly 5 billion pounds of copper in the resource category on the rail. Both projects are on the rail. They have the road, the infrastructure is in place. I'd argue that the two assets have unparalleled access to infrastructure in terms of base metal deposits, certainly in Canada. So the opportunity for us to put that under one roof was just too appealing to pass up. So as it turns out, it took us a year to de-risk the project. So a huge amount of work was done on the database, tearing it down, because it was that project had data from the 70s when it was operated by UMEX, and the copper concentrate was sent east to the Rouyn smelter in Rouyn-Noranda, and then a succession of juniors who really just sort of drilled 3 to 10 holes a year if they had the money, and most years they didn't have any monies. So it was about getting that data, harmonizing it, understanding it, and and validating it. I have to emphasize historical data has huge issues with validations, whether that is accuracy of the collar location, having assay certificates, you name it, and whether it's just properly modeled altogether. In fact, when there was a resource put on it as recently as 2021, as along with the PEA on the underground portion of the Thierry, and there was about 25 holes that just weren't included in the model. So there's it just it I don't want to say it was unloved, but we certainly have the skills, the team, the ability, and frankly, the capital and desire to tear it down, build it back up. And that's what we did over the past year. Additionally, in June, you'll see Cuprum published 6 or 7 holes that gave us additional confidence on its growth. And I think that when you look into the data, you'll see that Thierry, particularly the K1, which is the near surface open pittable material, is wide open. And the K2, just to sort of take a step back, the K2 was the underground portion where it was mined. It has a 43-101 resource, and you take these 43-101s with a grain of salt, but its resource is at about 24 million tons at 1.65% copper with additional nickel PGE credits on top of that. The nickel and the PGEs, the metallurgy is uncertain. There needs work there, but the metallurgy on the copper is sound. It's been proven because it's been sent to the mill for many years. So that's a fairly sizable resource. It stands up to the likes of a forehand on its own, frankly. But where we're interested in is the K1. I mean, there's obviously interest in the K2, but there's huge growth on the K1, which is the bulk tonnage, and the geology is so simple relative to the Opemiska. Geology is never simple, but it's simple relative to most ore bodies in that it's just very predictable along strike, east-west. You can just drill it and you know where it's going to be. That's what we've seen in the database. That's what the holes from 2024 have demonstrated. Historically, that near surface deposit has only been drilled to a maximum depth of 150 meters. And then we put a hole or two under it to test it at depth, again, from the 2024 assay results. And we were hitting 1 and 200 meter intersections at excellent grade copper. If you put in copper equivalents, almost up to a full percent. But again, the nickel's in there. But I think the K1 deposit is going to be 0.4, 0.5% copper with the nickel credits. That's where we sort of see it coming in, which is a nice grade copper deposit when you have scale. And we think this is going to be plus 100 million tons on the open pit. And it's going to be on the rail. The infrastructure is already there. And then you've got that sweetener, that high grade underground deposit at 1.6, which has almost 25 million tons. A substantial copper endowment. And then at the bottom, you'll see what they call the J and the G zone. There's a historic resource that again is almost 50 million tons there. So this whole area is very well endowed. It's been totally underexplored. I know that's a cliche word to say, but it really has been capital constrained. So our intent is to drill the what out of this project and systematically. And we have no interest in drilling 5 holes. And this needs a robust drill program to drill out a large resource and what we think can be done in a relatively short time frame. So that's the upside potential there, and then move it forward throughout the development phase. And then within that, of course, we have the Opemiska, and the Opemiska has its own very clear development phase, and we're moving forward to the PEA on that. Once you get to the PEA, you're sort of in this phase of the Lassonde curve that is deemed, unsexy, if you will. But we're going to be able to counter that with a robust drill program on Thierry. So I think it's, aside from just having dual assets, this new acquisition is going to give us robust news flow. And frankly, look, we're just going to be the largest copper developer in Eastern Canada, with endowments that will be on par with the big mega deposits out, the big porphyry deposits out in British Columbia.
I do want to talk about all these things and specifically how you're going to follow it up. But just briefly to go further on to the deal itself, there is, again, a related party transaction, so there could be a conflict of interest. How do you manage that? Because it's largely the same people who were involved in the private co that are now getting shares of QC, and you're personally the CEO of both. So how do you deal with that conflict of interest there?
Yeah, you know, you're absolutely right. It is. I'm totally conflicted on this deal, and so I handled it very carefully. We did it by the book, and not only am I conflicted on behalf, I'm the founder of Cuprum, I'm the founder of QC Copper, and I'm also the founder of ORCAP, okay, which is the largest shareholder. So it is a tripartite conflicted deal, and obviously, you know, I'm happy to be very upfront about that. In terms of how you manage that, it's not entirely unheard of in this industry, but it's all about disclosure. First of all, you have fairness opinions. So we had both companies had fairness opinions done by arm's length qualified people that assess it. They both came back saying it's fair. We had special committee on both companies to approve the deal and go forward with it and evaluate it and deal with the fairness opinions. If you want my opinion on it, we have to go to shareholders, you know. So I don't. While fairness opinions are nice tools to have, more often not, they come back with what you ask them to come back with. In the real world, shareholders will decide, and shareholders are going to decide on December. And you know, that's what I'm spending my time with right now, is talking to particularly QC Copper shareholders and explaining the merits of the transaction. We've socialized it and talked about it with all of our major shareholders, and everybody seems to be on side. The same is true for Cuprum, obviously, with the disclosure that we're both on both sides of the deal. But I mean, I think the value proposition is clear. The new company will be approximately 68% QC shareholders, 32% Cuprum shareholders. That'll be the approximate split. We're buying Cuprum at about, I believe the valuation, the nominal valuation, all share deal is about $12.5 million. And I think in the context of time, if you can buy an all-paper deal for $12+ million that has, you know, a $2.5 billion endowment in Ontario, I think through the lens of long-term thinking, that'll be a very accretive transaction. Furthermore, I'll say that in between the acquisition back in October of 23, we financed the company. Cuprum financed itself with about $1.5 million financing from highly sophisticated, completely arm's length people at a $10 million valuation. So you know, it had itself blessed with a $10 million valuation, and obviously its shareholders will demand a premium on any takeout, and the premium is 25% on the share premium relative to the most recent independent or arm's length cash valuation. So I mean, I think between having it blessed by a cash valuation at $10 million, having these fairness opinions, I just think it's a fair deal. In my gut, I'm on both sides. In fact, I'm probably more incented on QC Copper, because I'm probably on a dollar for dollar basis more invested in QC Copper than I am on Cuprum, although I am definitely a significant investor in Cuprum. You know, I have to make it fair. I think it's a fair deal, you know, and so that's my viewpoint. I think, and again, just to emphasize, shareholders will have their say, but I don't offer any guarantees, but I'm quite certain this deal will close in the first week of December as scheduled.
But what are shareholders telling you about this deal as far as you're talking to them now? Because you said the vendor of the asset, first of all, didn't know QC too well. What are they saying right now? Do they want to have this deal?
Well, I don't want to speak on behalf of them, but I'm quite certain they will be a party to this deal. They own 29%. Since the time, you know, when we were talking to them back in you know, call it summer of 23, they knew less about QC Copper. I've gotten to know them quite well over the past year, and so they're quite familiar with QC Copper. I obviously socialized this deal with them, and meaning just talked about it. And I do believe, like, I don't speak on behalf of them. I certainly don't speak on behalf of their shareholders. So I won't comment on what they may or may not do. That's for them to talk about. But, you know, on the whole, as I said, I stand by it. I believe we will have 100% of shareholders in on this deal.
Are there any royalties or anything else of competing interests that then passes over to you or any of the other directors, anything along those lines?
No, that's okay. Silly.
Yeah.
Respectfully, you know, like, no, like we've got no, like, look, it's transparent. There's no funny business going on. We're shareholders in this company. We're acquiring a related party transaction, but there's nothing untowards or any side deals going on. It's a share for share deal. You mentioned royalties. There's no royalties on Thierry, period, which is nice. And look, I think it's a home run transaction. I really do. I wouldn't do it if I didn't believe it. I'm putting my name and my reputation behind this. I think it's a unique opportunity to put two assets of that scale and category under one roof, start fresh, under rebranding under XXIX, or someone called it sheep the other day. I thought that was funny. But nonetheless, it's a great opportunity to build a scalable, legitimate copper developer in Eastern Canada with wonderful infrastructure. And if I'm right, now I don't know if copper price is going to cooperate in the near term, but in the medium to long term, copper price looks very optimistic. Who knows what it is in 6 months' time? But I'm thinking in 5 years' time, copper is going to be very sought after. Copper in Canada is going to be very sought after. And if you are looking for copper in Canada, you definitely want it on infrastructure. So look, I think these two assets, which both need to be de-risked and moved through the development phase, I believe that the PFS, that is where the difference maker begins. That's when you become the real deal, and you can truly define what the economics and the engineering challenges of a project may be. That's when you get re-rated to a foreign. I hate to use foreign as an example, but I mean we do in our presentation, and obviously that's a bold statement. But I really don't think that there's anything that foreign has or had that either one of these projects, Opemiska or Thierry, doesn't have. And we juxtapose it on our presentation. You'll see both projects have a bigger copper endowment than foreign. Foreign used to be a 14-cent stock before it had pre-feasibility, before Prem Watsa came involved. They've done a marvelous job. Hats off to the management team and the investors there and moving it forward. But their pre-feasibility, I believe their pre-feasibility has about a 22% IRR, which isn't eye-popping, but it's a legitimate project. And I mean, I think, and we're working through the scoping study on the IRRs and so on and so forth for Opemiska. Look, I believe we're going to be competitive. Or comparable on paper. Now, obviously, how that translates into market cap is another question. But look, I think we're going to be comparable at Opemiska with the likes of foreign, and I think Thierry has the same ability. Thierry is not necessarily going to be as high grade in terms of the open pit because Opemiska is very high grade, but I think it has the potential to be bigger. So look, I've been inspired in my whole career by the likes of Lumina, what Ross Beatty did in the down cycle of copper, acquiring a whole basket of, call it out of the money copper deposits. Same with FNX, Quadra, big success stories here. I'm using big multi-billion-dollar success stories in terms of referencing foreign and FNX and Lumina, but like that's the inspiration and that's the vision, and that's what I think we can achieve with XXIX in the future.
So I understand that reasoning of wanting to do it to combine the two companies. You mentioned the word there, though, de-risked, and that's important to me because having a £2 billion asset in Opemiska, which is still to be developed, was already not a small feat for a 20-something million dollar company. So how do you ensure you're not spreading yourself too thin and are advancing both assets properly, but also on time to take advantage of potentially those higher copper prices?
Well, we have the team in place, and so effectively QC Copper's management will be absorbed by Cuprum. Cuprum sort of ran as doesn't have a full team in place. We had a consultant who was a very knowledgeable individual who had been sort of the caretaker of the property, working with our team, we call it our middle management team, to move things forward. Guy Labelle and Charles and Denny and Asienne, our core team at Chappé Opemiska on QC Copper side are going to be taking over, and we're going to be leveraging all those skills. So, and they are at different development stages of development. So Opemiska, again, the skills that we learned at Opemiska and let's just call validating the 1,000,000 meters and rebuilding that was a huge learning process for us. And we leveraged those skills when we were working on Thierry in the past year plus now. All of the QC Copper guys have been on site in Thierry, part of our call it independent due diligence. All of the QC Copper guys are unconflicted, like Guy, like Guy was very, meticulous in his evaluation of the project, which I appreciated and worked with the independent committee and the fairness opinion folks to sort of deliver an unbiased view on what they saw. So those are the same people who are going to be moving forward. Thierry, in terms of what we're doing on Opemiska, it's really we're focused on. Well, we're going to be drilling. We got a drill program on the Cook Robitaille that's starting in November, December. We're evaluating what we call the Halo study on the open pit portion where the Springer Perry is. And then we're plugging all that into our scoping studies, which we're working with an independent engineering firm that is basically informing us internally about mine plan A, B, and C, so that when we do press the button on the PEA, we're not, surprised and it's informed. So that's what we're working on closely. Part of that process has been gaining the so-called social license, which includes both the First Nations, the applicable First Nations there, and as well as the town of Chapet. We announced, cooperation agreement with the town of Chapet over the summer, which the market just sort of said, oh, but that was, to me, that's a key milestone, and it's indicative of the town's willingness and desire to have this mine reborn again in their town for everybody's benefit, the townspeople, as well as obviously QC Copper shareholders. So that, to me, in time will be a significant milestone, because I think that is the single biggest risk. The perceived risk, certainly, with the Opemiska is our proximity to the town and our impacts on it, and whether we can build it or not. With given the social license, we're very clear and we've been very adamant, and I think the town agrees in parallel with this, provided it's done responsibly, and the town and all the communities, First Nations included, get their fair share. This is going to be a mine again, and there's little doubt in our mind that under the right economic circumstances that's going to occur.
This is going to be a mine. That statement there is interesting to me, because and talk to me like I'm 5, because I'm really not much older than that anyways. But what do you want to do here? Build 2 open pit mines over the next how many ever years, or are you now starting to look for someone to buy them off of you during a copper bull market? How do you see that strategy?
Well, I've always been very clear that I'm not a mine builder. What we do at the OR group, and that, the subsect of that certainly includes QC Copper, is we're very good at identifying opportunities. We're very good at evaluating the geology, and we're fully capable, especially with the likes of Guy Labelle and others on our team, of taking something right to bankable feasibility. Those are studies, those are drilling, that's, working with consultants. When it comes to putting shovels in the ground, building, and then even tertiary, so operating, those are different skill sets. Is it possible? Sure. Do you always want to present a credible threat that you can build it so you're not sitting there like a lame duck? Yes, you do. But there's no question, and this can be proven empirically, that more value is created in a shorter time frame in a trade sale. So I hope that's clear, that we want to take this up the development curve, meaning work towards pre-feasibility first and then bankable feasibility if we have to. But there's no question in my mind and my instinct, now I offer no guarantees, that this is going to be bought out if it's de-risked. And so that is my preference, and that's my prediction on both counts. And if I think as a part of this, we've tried to deliver, not because the market's asking for it, but there's no question that people are asking for copper. The market's asking for good quality copper projects. The market is predicting higher copper prices, and certainly the drum has been beaten on Canada. Now, I'll also be the first to admit that Canada is in the doghouse, frankly, in terms of permitting, development timeframes, and even access to foreign capital. I think we've made a few missteps. But I think it's, just like I'm doubling down on copper right now, and I am, within QC Copper and other investments I make, I'm also doubling down on Canada. I really fundamentally believe that this is the best jurisdiction in the world, although it has its challenges. 10 to 15 years ago, we were the undisputed resource development finance center of the world, and that was because of our metals endowment. And we have this well-established pool of assets, perhaps more importantly, well-established pool of talent here. And so my view is that the pendulum has swung a little too far. We're going to need to get our act together in terms of permitting and changing that regime in effect. And that's a very complicated thing to do, but I think if we are going to compete with the likes of West Africa, I mean, let's talk about West Africa. I know you follow it very closely with Awali, so do I as chairman of the company. There are risks in Canada. There are risks in West Africa. They're very different risks. In West Africa, you face, let's call it a political risk in terms of maybe there's a coup, maybe there's some sort of war or warlord. Those are the risks that are just sort of broad strokes feared in Africa. You don't have that risk in Canada. You've got a virtual guarantee of tenure, however, it's permitting. And whether it's going to be a 5-year, 10-year, 15-year, 20-year process. Look at the United States; it's terrible permitting, it's worse down there. So look, I guess I'm betting the contrarian me is betting on Canada that we're going to have to get back to productivity. We're going to have to go back to the basics, away from the financialization and all that other thing. I think most other sectors are well overvalued. Our resource sector is well undervalued and certainly underappreciated. And I do think we're going to have, and it's not a political statement, but we're going to have a shift in regime, a shift in approach towards developing these assets responsibly for the benefit of the North, for the benefit of the First Nations, for the benefit of our general economy. We need to be competitive with the likes of West Africa as the East is eating our breakfast. China is just gobbling up all of the resources, and I hope this changes, but it appears that we are headed for conflict with all over the world, and so we're going to have to secure our supply of fundamental metals, and I don't think there's any more fundamental metal than copper. Maybe iron ore could have an argument on that, but nonetheless, copper is an absolutely critical metal. Copper in Canada, that's advanced stage. Excellent grades, and on the infrastructure just makes everything easier. So that's why I think when you look at it holistically, the concept of merging these two companies under one banner, XXIX, is the way to go. And I think long term, and I'm going to put my money where my mouth is. I'm already heavily invested individually, but you'll see me on the bid between now and the end of the year.
You're mentioning your position with Awali Resources, and that reminds me that you do have multiple management and board positions. Do you aim to remain the CEO of XXIX now through that process that you're describing here?
Yeah, I mean, define process. Look, I'm always looking for a better individual to run the company. I had been looking for a replacement for QC for some time. Honestly, now with Guy Lebel as our president, he's totally changed the dynamics of this business, and it's taken a huge amount off my shoulders. He's a mining engineer. He knows his stuff on that front. He was VP Corp Development for Capstone, big copper company. VP Corp Development for FNX, Quadra. So he knows his stuff, and he's just made my life a lot easier. So look, I think the pressure is off in terms of my time. So he's definitely alleviated some of my pressures, and as has our team at the Org Group. We've got quite a robust team that we've built up, which has taken close to 15 years to get to, but it's all about delegation. But I want to emphasize my focus here is on XXIX. I intend to remain the chair and CEO until somebody else comes along that's better suited. I'll admit, I like being behind the scenes. My preference is to be behind the scenes and putting new opportunities together. very clear that anybody who follows me, I'm very opportunistic. I love putting new things together. I love identifying opportunities like Cuprum. I think at the org group, we've identified a little niche that we have time and time again shown to be quite effective at is finding these things in the trenches and looking where other people are not looking and acquiring them at a very, very good value in tough times and having the capital either in our treasury or investors willing to invest alongside us to execute these transactions, and then finding the right person, like an Andrew Chubb, like a Tony Moreau, like a James Sykes, like a Guy Lebel, to really take the ball and run, and then leverage the platform that we have at our group, which includes, finance, operation, geology, mine engineer, as well as the connections that I have made and the ability to raise capital to fund all of our operations. And so we've got this little training ground for first-time CEOs, if you will. That's not exclusive, but I love working with young, hungry people who are ambitious, smart, honest, and want to make a name for themselves. And again, at the org group, we just offer this platform. So if you are a first-time CEO and you want to do it on your own, it's challenging. It's challenging to make your monthly payrolls. I mean, it's laborious. It's challenging to manage your Q1s, and it's challenging to find the right geologist. So we have all of that baked in already. So we just have, again, this platform is hugely advantageous. It's also advantageous on our abilities to raise capital because we've made people money. Now, not every deal succeeds all the time. This is not a linear business. It's very volatile, and sometimes things take time, sometimes years. I think of things in the context of 5 to 10 years. If you think anything less, I think you're being way too optimistic. That doesn't mean from a shareholder perspective, but when you are an owner and we treat everything as if they are our own, that includes the assets and the capital that's entrusted to us. You have to plan for the long term.
You mentioned you're going to be on the bid with XXIX, meaning buying in the open market. Is that I read something about an escrow on those shares that you're going to write out. There's going to be an 18-month escrow, right? As far as I understand it, because I'm trying to figure out what the impact might be on the share price. Who ends up getting the new shares of QC, and if there's someone wanting to get out, is there someone else to take their place in the open market or through a cross or whatever else?
Yeah, so you're right. Cuprum shareholders will be subjected to an escrow, not too dissimilar to if they were going public. There's usually escrows associated with that. Upon closing the deal, 10% of Cuprum shares will be free trading. So only 10% of the 71, I believe, million outstanding that's not owned by QC Copper, and I would say half of that, because don't forget OCI owns 40%. OCI being ORCAP, which is one of our portfolio companies, is the largest single shareholder. So it's actually fairly tightly held. To go back to the escrow, then 6 months from then, there's 30% become free trading. Another 6 months, 30%, another 6 months, the final 30%. So it's a staged process. Obviously, we're very, anybody who has free trading shares come off, you need to manage that process, but there's not going to be a lot of float free trading come close because, look, I control probably close to 60% of Cuprum through ORCAP, myself, and other insiders. And then it's only 10% of what we don't control. We're not selling on the open, I assure you that. So I don't think it's a huge situation. Obviously, 6 months and 12 months and 18 months, those become bigger tranches. Shareholders are, and if we're up, shareholders are going to seek liquidity. They always do. And so that's just about making a market. And you can't expect shareholders to be there for 5 years, especially as of late. Liquidity is an opportunity that people have been utilizing. We see that time and time again, but I think we structured it quite favorably for the new company so it can manage any liquidity on the horizon.
Do you, I believe we talked about this previously, but did you consider doing a rollback, and are you still considering doing a rollback in QC once the deal is closed?
Well, we never take anything off the table, but I do not like rollbacks. Simple as that.
Yeah.
I do not like rollbacks. Like all else equal, they do not create value.
How do you figure I mean, why do you not like him?
Well, because typically you do a rollback at, you take your share price from 20 cents to a dollar by doing a 5-for-1, and then before you know it, your dollar stock's back down to 20. So, that happens more often than not. That's obviously an extreme example, but that's why I don't like them. I don't mind the Australian version, although I think they take it to probably to the extreme by having, a billion shares outstanding being the norm. But look, again, let me be very clear about it. We will take no options off the table ever. But I personally actually have never done a rollback, and I have no plans to do it.
I was curious to see what the market reaction would be on the deal. You announced it pre-market open, so I was looking on the open. There's a little bit of activity, but you're now back at again 13 cents. So it doesn't, like, if you slept through a couple of days, which sometimes I consider doing, but if you had done that on the market and you wake up, it's just 13 cents again. So the market voted the deal, I suppose, neutral. You don't seem to believe it's neutral at all. So how do you change the market's perception from here on out and get the stock moving again?
Well, look, I guess I wasn't surprised, but I was also pleased. Oftentimes, the acquirer trades down. I mean, that's sort of more often than not been the case on most deals. So look, we actually traded up a day, and then you're right. Yesterday, it traded, even Steven. So that's just saying it's neutral. But honestly, how do I change that? Well, I get there and I talk to folks like you. I talk to shareholders directly. Between now and the end of the year, I'm going to be out on the road, pounding the pavement, both online, but also old school, going around and meeting shareholders directly, prospective new shareholders, and that's fundamentally what I think XXIX is all about. Is deepening our pool of capital, being less specifically exposed and named after Quebec, because of course QC stand for Quebec, because we were single asset Quebec. Now we're not so Quebec focused from an investor standpoint. We've diversified into Ontario. That adds a lot of benefit in and of itself. But the whole idea is to be scaled, because now, Antonio, we have 5 billion, almost 5 billion pounds of copper in the resource category. That's appealing. If you want to be cute and convert that into gold equivalents, it's well over 8 million ounces of gold on a dollar for dollar basis. It's a lot of copper. I mean, so I think that resonates. And so my job now is to go out there and educate existing shareholders on the merits, and then find new ones and bring new blood into the story, because that's what needs to happen for the entire industry, and certainly XXIX will be no exception of that. So that is my mission, for now and until this company is sold, frankly. But obviously, I'm going to be working doubly. So just to inform and educate anybody who's interested in getting exposure to the largest copper developer in Eastern Canada.
I hope you didn't just give yourself a new nickname there with even Steven. I can come up with better nicknames for you if you need one. But
look, I've been called worse, Antonio.
I've seen it. You said that you acquired Cuprum out of a distressed situation. Mm-hmm. How distressed exactly was it? Because and what I'm really asking here is, are there any legacy challenges, permitting issues, locos, anything else that is still to be solved before you can go and tell the story that you're telling me about here?
No, it was a corporate distressed situation, if you will, whereas the vendor had debt on another, it was recourse debt on another asset. I effectively acquired that debt on the other asset and gave myself a seat at the table. Okay. And which, highly incented them to transact favorably. But again, if it wasn't done friendly, and I always look to do things friendly, it could have been litigious, which only the lawyers win, and hence why they are a significant shareholder. They're good people, and they've got an interesting asset out in British Columbia. But honestly, they acquired Thierry. They didn't really pay much attention to it. They saw value in it. They see value in it. They knew they were selling it at a very, very low value. But look, we've built value by paying attention, focusing on it. They're coming along for the ride, and just like every other shareholder, we're going to make them money. That's my job.
Well, what's your timeline on coming out with stuff that would actually then move the market? Because again, you're saying you're going to go out and tell the story, but you're also going to have more things to talk about outside of that story. Theory has a PA on it from 2022. Correct me if I'm wrong. But
Thereabouts.
when do you have a timeline that you're thinking, I want to have a new PA by then, and that's when the market is going to start paying attention, or any timelines that you can give me?
Sure. So let's talk about, the timelines on Thierry, what we're doing. Aside from, the focus primarily, which is closing the transaction, the operations are such that actually we haven't announced it yet, but it's not super material, that we just got OJEP, which is, a grant from the government. So that's a nice little freebie that we'll be doing there. What we're going to be doing with that money and others is we're going to go and resampling core. We actually found, again, what's interesting on the K1 deposit is that there was a whole lot of drilling that was never sampled because they weren't looking for the disseminated. So there's a substantial, call it free drill program, because of thousands of meters of core that's sitting there and unsampled, and we see it. We went up there and we see it, and this is disseminated copper mineralization. So that's the first thing that we're going to do, or the next thing, I should say, on Cuprum. It's happening as we speak. We've got a team up there right now, cutting and sampling core, which we're going to take. It's, as I said, it's a free drill program. We're going to put it into our model. And so that's nice. That's not earth shattering, but that's nice. That's a low cost accretion for data, or acquisition of data, I should say. But beyond that, for 2025 specifically, we may do some drilling at the end of this year, but really 2025 is the year we're going to go at that, and we're going to drill it substantially. So, I'm not going to quote meters yet, but, we want an aggressive drill program, primarily focused on K11. We see huge growth potential there. In between, and then on K2 as well, which is the underground, where you have that 25 million ton high grade deposit. Now, the holy grail, I think, if we really get lucky here, and I think we've got a good shot at getting lucky, is in between K1 and K2. It's just very devoid of drilling, and there are geophysical signatures that would suggest that the mineralization is there. And I think, without any sort of faulting that we're unaware of, there's a good shot that the mineralization continues, because on K1 it's very, as I said, it's very predictive, runs east-west, and K1 and K2 are right on strike. So if we can connect those two zones, perhaps, even find another K2, high grade underground type situation. There's all sorts of potential here, because it just really hasn't come at it with a sophisticated and systematic drill program on that, call it the north area there. In the south, there's the J and the G zones, which have historical resources of upwards of 500 million pounds, 50 million tons thereabouts. So there's growth there. And then on the east side of the project, something we don't really talk about because we don't know a lot about it, but let's not forget that Pickle Lake is a gold camp, historically speaking. Immediately adjacent to our east, there's the Pickle Crow, which is an asset owned by Firefly or Firefox, used to be Auteco, Australian company that bought that, put $15 million of drilling into that, published a multi-million ounce deposit there. They flank us. So the point I'm getting at is our eastern side of our project is very prospective for gold. We're going to test that. We count it as zero until it's not, but we're in gold country. But the Thierry project is a bit of an anomaly. Sort of, you got gold to our east, gold to our west, and then you got this copper nickel PGE magmatic system right in the middle there. So it requires a lot of drilling, I think. Don't hold me to account, but this is what our plan is, to go out there with a robust drill program and deliver a consolidated MRE on Thierry by the end of 2025. So that gives us about 14 months to drill and to publish an MRE, using obviously historic data, but a lot of new data. And we think it's going to be robust. So that's the development plan on Thierry. Again, shifting gears to be repetitive, because sometimes I need to be repetitive, is at Opemiska, where we're going to be drilling on the Cook and the Robitaille starting in November. We're going to put on our saddle zone, if anybody follows the Springer and the Perry portion of where the open pit, where our big resource is, the saddle zone is the area in between Springer and Perry. We actually have an idea about a new orientation of the veins on the saddle area. So we're actually drilling 3 holes there to test this theory, again, on the orientation of the veins. If we're right, we have 20 holes going on that, which could alter the economics of our open pit. And then again, then the drills go over to Cook and Robitaille to drill that. Just recently, we finished the data validation process on the Cook and the Robitaille, which is the third and the fourth mine, which encompassed the Opemisko when it was in operation. That was sort of a rinse and repeat process that we did on Springer Perry. Now we're catching up and doing it on Cook and Robitaille. We believe in the first half of 2025, we can publish a PEA. Our objective on the PEA is to say that we're not going to move any houses. I think that is the smart strategy to do it. If we were to publish a resource on, say, the whole 100 million tons, we'd have to move at least one house, more than that. But I'm just making the point that the PEA is going to come out. And we're working with the group actually who was involved with working on the Malarctic. And we've used the Malarctic, which of course is Agnico Eagle's largest mine, certainly in Canada. And we're using the exact same setbacks. So we can, we could benchmark and so I think we're going to have a nice, robust resource, very good grades, good mine life, with the optionality of pushing back later in life. But I think, we can have close to a 13, 14, 15-year mine life. Again, we're fine-tuning this, but a long mine life there with the Opemisko as the anchor asset, with the Cook and Robitaille having future potential. But then there's other assets. We are in the midst. Chapais-Chibougamau is a very, very mature district. It's very well endowed with copper and gold. There's a whole lot going on to the south. There's a whole lot going on to the east. If we can put a mill there, everything changes, and that's part of our strategy.
I'm not hearing much about what I'm writing down here is Roger. I know that's not as advanced, but you still have those grounds. What do you want to do with that?
The Roger. So I've come to the conclusion that the Roger is going to be part of a separate camp because it's gold. And I do think that, talking about Chibougamau, when we talk about synergies and everything, Chibougamau really has three districts. It's got the west, where we are in the Opemisko, and others. There's the Scott Lake deposit. There's a whole host of other deposits. Then you've got the east, which is sort of more in the camp of where Dore is, but further. And that tends to be more gold rich, but there's certainly some copper there. And then in the south, you've got where IAMGOLD is and the Monster Nelligan. So those are three sort of distinct districts. I don't believe any of those districts share yellow trucks, if you will. But that doesn't mean that there isn't value in consolidating them under one roof. I think the exception might be, the gold. So I think, to get to your point, Roger is really a gold deposit. And it's low grade, whereas it's probably not economic to ship too far. And I would suggest that it's too far. So I don't really see the Roger being part of the Opemisko strategy. We're going to own, I think we only own 50% of Roger right now. Part of our objective shortly is to execute the other 50% ownership, so we have it outright. And then I think it fits in. So it may not fit into the Opemisko plan, but it fits into a plan. So, stay tuned for our plans, our official plans on that. But there's no question there's value there. I believe it's 500,000 ounces. It's about a 1 gram deposit. It's next to a whole host of other deposits. What it needs to do is to be evaluated in the context of a consolidation around itself. And we do have plans for that. So stay tuned.
Does that include, and tell me how much you can tell me, but does that include JVing it out, letting it go, finding an option partner?
We'll see. Look, we have not finalized it, although we've conceptualized it. And so I won't say anything more than that, other than I've made my position clear on where I think it's may or may not go and where I think it fits best.
That's fair. Good. Well, Stephen, I've been through most of the stuff that I wanted to ask you here. I think almost all of it. Happy to sit down with Charles and maybe do kind of a technical deep dive on exactly what you'll be drilling. But this has been great. What am I forgetting to ask you, though? What else is important that you think I should be asking, but I'm not?
Well, look, I think we've covered it. It's been pretty comprehensive overview of XXIX and our plans going forward. I encourage, if I didn't cover anything, reach out to me. My contacts are readily available on our website and our presentations, and I always get back to our shareholders.
Well, thank you so much for sitting down with me today, sir.
My pleasure, Antonio. Thanks. Good to see you.